Hello guys, welcome back to our YouTube channel. As you all know, we are presently dealing with income tax, right? Yeah. In this video, we are gonna take a look at the core of income tax. That's it. Our topic is income and income tax. What it is really meant by the head income under income tax. And for this, we simply need to find answer for two questions. Alright, before that, let's get familiar with the term income. Not from the tax point of view, but in general sense, what does the term income really means? Income simply means the money received by an individual, especially on a regular basis for work or through investment. So easy, right? But this definition really lacks some clarification. Like, who is the recipient here, and what are the different ways through which they earn income? First, let's clarify the recipient. Who is the recipient here? Obviously, it's a human being, right? But in commerce, there do exist someone who is so close to a human being, artificial in nature and capable of performing business activities, which includes buying, selling, signing contracts, and so on, like an individual. Unfortunately, unlike human beings, they are unable to perform the activities like walking, talking, breathing, etc. Yes, it's a business entity, and we call it by different names such as firm, company, organization, corporate, and so on. Like an individual, the company is also liable to pay tax for the income they are earning through different sources. Hence, what next to clarify is the different source of income, like the different ways through which money is earned. For this, let's go and meet Mr. Philip. Mr. Philip is an employee at ABC Limited from which he is getting his salary. And he also holds investments in XYZ Limited from where he has been receiving interest and dividends. Moreover, he owns a farmland and earns money by selling his crops and other agricultural produces. And finally, being a partner in his wife's business, Mr. Philip has been getting monetary benefits from that too. So, for Mr. Philip, these are all his regular sources of income. Not only that, there may be situations that might bring money to Mr. Philip. Like Mr. Philip when he wins a lottery or in a gambling or getting the keyman insurance policy amount. Yeah, such accidental and irregular income is known as casual income, and tax payment is mandatory. And now I guess we have clarified the recipient and sources to get the proper definition of income. Income simply refers to the money received, especially on a regular basis, which means irregular basis is not denied completely and is given consideration, right? By an individual or business entity through work, investments, dividend, interest, capital gains, sale of agricultural produces, and so on. And coming back to our first question, the answer is no. We don't have a special definition for income in tax, but it do mentions what should be included under the head income. And yes, there are some rules for treating income from the tax point of view. Well, let's see what are the rules. There should be a definite source of income, like we said about Mr. Philip. Both Legal and illegal income are taxable, like the income from smuggling and drug dealings. Lump sum receipts can also be income. There is no condition that the income should be received periodically to pay the tax. In an institution, if the income from subscription of its members exceeds its expenditure on its members, that excess amount cannot be treated as a taxable income. It is not essential that the income must be received in the form of money to pay tax. Whether the income is permanent or temporary, it is immaterial from the tax point of view. If an assessee has earned an income but has not actually received it, it will be treated as his income and is meant to pay tax as far as he is entitled to receive it. Reimbursement is repaying a person who has spent money. So, when the person who gets his money back, it is not treated as his income. The savings a woman creates out of the money received from her husband for her personal expenses is not treated as her income. Diversion is when the income of a person is diverted to some other person under some legal obligations, but application of income is when the income is given to someone else after receiving it. Here, negative income simply means loss. So, these are all the rules. And finally, we are concluding this presentation. Our topics were income in income tax, its definition, and the rules for treating income under income tax. So, that's all from me, and thanks for watching.